TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 4. You get the NASDAQ down. NASDAQ's flat. S&Ps are down 2. Gold contracts up $4.20, trading at $1,260 an ounce. We have silver up 7 cents at $17.58 an ounce. Platinum's up $1.50 at $9.50 an ounce. Copper's flat at $2.18 a pound. Light sweet crude down 71 cents, $50.90 a barrel. Bonds, 10-year note down 6 ticks, 129.22. 30-year bond off 12 ticks, 163.31. Both the 10 and the 30 right now are under their September swing lows. I expect you're going to see that change more than likely out here today. King dollar. King dollar up 93 ticks, 97.78. King dollar had been up a couple hundred ticks. Took out its swing point from July. Didn't have the volume, though. I expect that you're going to see a failure on that today. Euro's trading at $1.10, and the yen is trading at a 103.86. We go over and take a look at this SPY, the S&Ps. That's what you're looking at. SPY last night goes down big time, wide price spread, accelerated volume. You do 130 million shares on the way down. We have Fed minutes coming out today at 2 o'clock. You can expect high volatility. And the way this market is trading, folks, it looks to me like when we read those minutes that even though the market is betting that there's going to be a Fed hike in December, whatever's in those minutes is saying to me that, guess what? Dollar's going to go down, markets are going to have a nice bounce, metals are going to have a bounce. So the SPY, this thing can bounce up to 214.19. I expect you're going to see light volume. This is building cause to go break the low that was established out here on the September 12th level and get down into the June 27th level. The consolidation is still in place out here. Bottom line, I expect you're going to get lower prices, but guess what? Not today. The Qs came down with high volume, 27.7 million. Bottom line, this thing wants to bounce somewhere up into the 118.15 once again. Gold contract. What do we have with gold? Gold contract out here hit a low today of 12.51. You're at 12.58 right now. This wants higher price. This is tested the low. Tested the last Friday's. It didn't get to the low, but the bottom line is that it tested that bar, dramatically lighter volume, rejected lower price again once out here today. Gold wants higher price. Now we take a look at these bonds. This is what you have happening in the bonds. First, the notes. The notes. The swing point that we're talking about out here is the swing that was established on the 13th of September, 129.26. You're down to 129.17 today. You can expect a rejection of lower price. These bonds want to go topside once again. I expect what that's all about is that's all about whatever is inside those Fed minutes. And good old King Dollar. What do you have with King Dollar? Okay, King Dollar had the wide price spread. It didn't have the volume behind the move as we took out the July swing point of 97.61. Bottom line, we've hit 97.96 today. We'll see if the baby holds. My take is that it's not going to hold. The reason I'm saying that is that intraday, you've already had a couple sell downs inside this index, and the first one that came off those highs was a pretty good sell down volume-wise. The second one that's happening right now also has some good juice behind the move. This is trying to get back inside that 97.61 area, which would make sense because it's 100% of a move, meaning that the acceleration up was nice, it was good. So it's all about the Fed minutes out here this afternoon, folks. And the way this market is trading right now, it looks to me like those Fed minutes are going to take the dollar down, wants to take the metals up, wants to take the bonds up, and once the S&Ps look like they're going to bounce. I suspect they're going to bounce on light volume, and this is just a B to a C of a larger ABC structure on the way down. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking right back here, 10 o'clock tomorrow morning.
If If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.